Hi, this is Anthony Parent of Parent Parent LLP, the IRSMedic. And in this video, I want to talk about your settlement options when your business owes back payroll taxes. Back payroll taxes are one of the biggest problems any person could ever face with the IRS. The IRS is very aggressive about collecting and assessing these penalties. Now, I guess your first option, if you owe back payroll taxes, is to do nothing. Just continue to not make payroll deposits and try to live below the IRS's radar. Meanwhile, your personal tax liabilities go up, up, and up. The IRS could then claim that you're pyramided tax liabilities, and you can watch your problems get worse and worse. Now, for a lot of our clients, this really isn't a great option. That they know sooner or later they're going to be shut down, that the IRS is going to take all their money, and they're going to be left with very few options. So a lot of times a client will that one of the alternatives that we can get into is something as an installment agreement. And this is rather straightforward, that we come up with an amount that our client can afford to pay back to the IRS each month. Now, the problem with this is that businesses live and die by their cash flow. And there's very few businesses who have a steady cash flow with a guaranteed amount that they'll have each month. And there are so many businesses that try to get installment agreements on their own, and they end up defaulting on these installment agreements. And the next thing they know, the IRS is back in their life, more aggressive than ever. So one of the lesser known alternatives is something that you can get into a hardship status. That is, as long as you stay current with the IRS won't look for anything for you. So that whatever cash flow you were going to pay back to the IRS, you might be able to invest into new business, some better training for your employees, or even in a marketing campaign. And then when the business is running better, you'll have plenty of money to repay the IRS. Another option that we really like is filing an offer in compromise on a running business. And the big advantage to this is that the repayment terms can really, the repayment terms, the way you're able to structure the payments, can really fit much better into a company's cash flow. And that you're also able to reduce penalties and part of the payroll tax liability. Now, for clients who aren't able to do these, aren't able to get current, we will have a frank discussion with them to say maybe it's time to shut down the business, and if there's any assets, let's apply those to the trust fund recovery amount. Because that trust fund amount, and it's really our job to see that get as small as possible, because that is an assessment that will follow someone well beyond the business stopping. And that could really frustrate an entrepreneur from starting a new business and really making a success out of it. So it's essential that for us that the bleeding is stopped and the problem gets no bigger, and then we could chip away at getting it smaller and smaller. This is Anthony Parent of Parent Parent LLP, the IRSMedic, and be sure to follow us on Twitter at IRSMedic.com. And for more tax tips, go to IRSMedic.com. And if you like this, please subscribe to our channel. Thanks for watching.